Hello guys, welcome back to another weekend edition of the market analysis video. I'm Taylor Moe with True Trade LLC, and let's get right into it. We're going to start out looking at a kind of macro picture of the SPX here, just so we can get a good feel of where the market is at from a macro perspective. I think it's always good to review this at least a couple times a month, see where the macro picture is, and that can kind of give you a bigger bias on the market, so that when you're looking at your daily charts and even day trading, you kind of have an idea of where your macro areas what areas on a bigger, longer term chart are really the big support areas, and this kind of keeps your sentiment in check. You're not getting too bearish if the macro chart is really looking fine, and vice versa. So right now we are in a really pivotal area, guys. As you can see here, these are the 2009 trend lines. There's one that goes from this low here up to this low and has been hit a few times here, about 4 or 5 times throughout the course of the last 10 years. And then we have this trend line that actually goes from the major low up to this low, and it has a bit different trajectory, almost gets hit here, and it does get hit and closed above recently. And so you can see this trend line here was actually broken on the month of March, but we came back, we fought back, and we healed ourselves back above it. So that's a plus in the bull camp for me on a macro chart. The other thing that I want to note is these white fibs. These are the fibs from the 2009 low up to our recent highs. And what you want to notice here is that we never had any close below this 38.2%. That's typically the first fib to provide very strong support. Your 50 and 61 are typically more important for long-term reversals, and so I am not putting away that we can't come down and visit these in the future months and future years, but for now we're above the 38.2 and we're actually back above the 23%. And so really that's my near-term bogey as far as macro picture goes. Are we getting back below this trend line, back below our 23.6 on a long-term perspective? And then right here, this shoulder line, this is a potential, right, very potential head and shoulders, but we have the left shoulder over here, and we drop to a neckline of about 2,500, let's call it, somewhere in there. We come up, we make a head, and we drop down pretty aggressively. This is what you want to see on a head and shoulders, is that the down moves are more aggressive than the up moves, and that's so far what we're getting. So we're having a pretty aggressive down move, slower up move, right? More bars to get this up move. We see a very aggressive down move, and this is on high volume. Can't see it on the SPX, but very high volume on this. Now, this is really, guys, for me, it's our key short-term level on the upside. Are we closing weekly above this, monthly above this? That can give us the signal to actually go quite higher. You can see this kind of broadening lows and broadening highs pattern that we had right here, and that low has continued to hold. And so if we get over this very, very important area, I think we have a solid chance. That would be a 61.8% retrace break. That's from this move down and come up, and we've retraced 61.8%. And so, guys, if we're getting over this level, I just want you to know, I think it really opens the door to come up here to this next fib, to this monthly high, and up to this broadening top trend that we had going on. And so just be watching from a macro perspective over the next couple of weeks. Are we getting above this 293, 294 area, closing weekly above? I really think that sends us up to about 313, 314, guys. So from a macro perspective, guys, this market is okay. It is okay. It's above all trends. It had a bullish. It's an inside month, so we can't really look too much into that. But from the position that it's in, it's above trend, and we are fighting a pretty important resistance. So we shouldn't be too biased either way here, but we should realize that we have no reason to get extremely bearish, as we are above all trends, and we could potentially have room up to here if we can clear this resistance. Okay, now let's move it down. Let's get into some weeklies. From the weekly perspective here, guys, let's look at this last week of trading action. From this, guys, and you can clearly see this is our important zone on the downside. 2800, 2750. This area is really going to be where the bulls need to keep holding to keep our big term picture bullish. And if we're getting below this area, guys, that really opens the door down to 265, 260, potentially even that 250 to 245 zone, which I believe can provide a really significant bounce if we are back down here. Now that's looking pretty far out right now. Really, these are the two areas we should be focused on. This is our range, guys, and it's, I'm not gonna lie, it's pretty difficult to read the markets because there's so many divergences right now, and I'm sure a lot of you guys are getting frustrated with the price action that we're seeing. Again, I've been recommending since I think back here to only strictly be day trading, at least as far as like major market stocks go. Don't get me wrong, there's some good swing trades out there right now. There are, because there's so many divergences, there are some really strong and really weak stocks. And so if you do pick them correctly, there's nothing wrong with swing trading. But as far as like trying to swing trade this market right now, the S&P, stocks that look like this, I think it's gonna be really difficult, and I don't think you should be doing it. We're in a range, okay? We're in a range. Right now, there's nothing on this chart telling me bearish. We simply had another retest of the low, finished back at the top. But at the same time, you have resistance here, but it's not pushing us down, guys. It's not pushing us down. And that's what you want to notice is typically when you come up to a resistance, right? Like here, I mean, not to say we can't get pushed down in the next couple of weeks, and we're going to look at some reasons, how that can happen, where that can happen from. But right now, we're just kind of moving sideways in this range, and there's no reason that cannot continue to happen. Okay. If we go down to a daily chart on, let's say, the SPY here, I believe I have a pretty simple picture drawn here. Now, actually, we're going to go over to the ES. I believe I have it on there. So, again, you have this picture, guys, of a range, right? Bottom of the range, top of the range. And after this week's action, this is what I'm starting to see, and I went over this on Thursday, is that there's potential for us to hold in this and actually make that move higher up to that the 310 to 315 area up in here. And that's just what I'm noticing, is because remember we were talking about this head and shoulders potentially, and that this was like our neckline and that we broke it. The thing is, we have to pay attention to if this high right here is rejecting. Remember we talked about this in our Thursday video in the midweek update. This is kind of our area where we've rejected at first. We've essentially had two false breakouts of that area, created a little head and shoulders. Here's a neckline, and it's broken. Do we get follow through selling immediately next week? Come up here, reject, and get follow through selling, breaking these lows right here. On Thursday, remember I said on the downside on Friday, they had to break the 281 level to get going on the downside. And you can see exactly what they did. They came down, they tested that 281, and we had a bullish reaction off the lows. So the market, as long as it's holding this 281, this is a reversal. This is a reversal. We held the area that we reversed from on Friday, and there's no reason this can't continue up here. This will, again, it'll be the real test. Maybe it's right here. Maybe we just reject here off this high. But guys, if we start getting over that high, up over the zone, okay, maybe we test the highs and we just continue sideways, guys. If we get back up to the highs, guys, I have to say that I'm convinced that we'll just flag and make another move higher. But it's pretty much the same story as the Friday, guys. We're really just watching the same two key zones around kind of 287 to 288, and then this 281 area. That's going to be our current range, and we can get hints midweek about where the market's going based on rejections of these areas or breaks of these areas. It's pretty simple going forward. Just trade the range. Don't get too biased, because this is again, it's a period where nobody really knows what's going on. But you know, from experience, I know the market likes to frustrate bears, and whether the economy is looking terrible or not, the market likes to frustrate bears, and that's just a fact. And so it wouldn't surprise me to continue on in this flag. But again, guys, this is the high. Early next week, we have to see. We have a down move. We have a pivot. Can we just wedge right here and not break this high and then continue down? Absolutely, we can. And so that's our high to be watching. I think if we clear that high, we're going to get back up to the highs, or at least back up to this trend line. And then if that happens, I think it's possible to just flag and move higher. So that's the picture on the ES. That's what I'm getting from the ES, from the SPY, from the S&P. But you know, when we go into these other markets, guys, you're going to see some really crazy divergences starting to build, and it's a bit of a warning sign for me. I'm just going to go get into it. The first one, and the worst looking one, this one is just screaming that something else might be going on, guys, is the transports. This is always the first one to signal that something's going on. And, you know, I'm just not liking this. I'm really not liking this. Let's go to a weekly. You guys, from a weekly perspective, you know, it's tough because we have this breakup candle. And in my opinion, this trend line that I have drawn, it's acted pretty important. I'm not, again, I don't put all my weight into trend lines. I don't care that much. I'm going to look at the price action first. Essentially, we have this up move, and we're holding the lows. So you know what? I can't say it's incredibly bearish, but here's what I'm noticing. We essentially based here, and what you should get out of this move is a move higher, and we did. We got it here, but this right here is what's really concerning me. We basically came back up, tested this breakdown candle, and we rejected on pretty high volume. After that, we got an up move off this trend line, off these lows. And then the next week, this week, we showed extreme relative weakness compared to the market. The DJT was down on Friday 1.28% compared to an S&P, though I think was up like 0.5%. And so that's a huge warning, warning, warning. We're back below this trend. We're actually back below the lows of this basing pattern. We rejected on high volume here. So this is sending me a warning sign that maybe everything is not quite as bullish as it seems. That's what I'm getting from this. And that doesn't mean we can't kind of just come down lower and bounce again. We totally could. But right now, this is showing weakness, and I would not be surprised to see that kind of bigger pullback in the market that we've been waiting for. Doesn't have to reach new lows, doesn't have to be insanely volatile, but it can be. And I think that's something, this is just something we need to pay attention to, and it goes right on the bear side of the camp. This does not look good to me. Okay. Work it down to a daily, and we were talking about this head and shoulders pattern. Here was our neckline, and we wanted to see on Friday, could the DJT, if the market's upside, actually rally and get back above this? And not even close, right? Not even close. They tried, and to me, this is just set up to come down to these lows, guys. It's really just setting up to come down to these lows. This does not look good. I think we get another, another 5% drop, 6% drop in the DJT. I think it's very, very possible. That looks like what's going on to me here. Okay, and so that doesn't mean all the other markets have to follow necessarily. But I think this is usually a really good leading indicator, and it usually gives you a hint a day or two ahead of time. And guys, I think this is a big hint, and it's a big check mark in the bear camp. Okay. The IWM, the small caps, again, really different markets everywhere, guys. I mean, the IWM, we're essentially starting to go into this channel. As you saw on like the SPY, it's the same kind of channel. It's a little more downsloping. And this one's interesting to me too, because we actually have the highest volume we've seen since back here and back here. And it's on a low. And it's on a reversal. So that's really interesting to me too. We have this large volume on small caps. They're showing relative strength on Friday, while the transports are weak. And so super interesting to me, because the IWM and DJT, they actually typically will lead together. They typically will both show weakness and both show strength at the same time. And so guys, this is like a market that's really difficult to know the next move. And again, I just stress, if it's not something that's like breaking out to all-time highs, if you're not looking at like an Nvidia or a shop or a Netflix or something really weak like maybe a bank, these are stocks that are good for swinging right now. But man, if you try to swing anything that kind of looks like the major market right now, that's really kind of ranging, good luck, because this is a really difficult market to be reading right now. The gist of this is, guys, it's kind of in the same position as the SPY. Are we getting back above like this gap here and this high? Or can we just wedge here and kind of do this thing, maybe continue one leg lower? Do we break out of this? Or does the market just keep holding up and make that another move higher? It's really hard to tell, and I think we just have to keep watching until this picture gets more clear. I think I will try to do a midweek video as soon as I have a more clear picture. But there's a lot of divergences out here, guys. The XLF, super interesting. Close is right on its long-term trend line. I mean, just incredible here. We wanted to watch this XLF because we wanted to see if it finished the week up here or down here. Again, this is, to me, it's a weaker close, but it's not necessarily bearish. We've held our breakup candle. We came down and tested, and we closed above. We closed above our trend line, really close. And this, to me, guys, it's tough, man. It's tough. This can definitely see upside, but the financials have been so weak, it's hard to almost think that they would see upside. But again, guys, I mean, It's tested a breakout area. It's on decent volume, reversal candle. This is typically a 3-bar play. You get a reversal candle, you get a basing candle that comes about 38 or 50% down. And if you break these highs, there's a good chance we head up here. So again, tough one, but we have a double top, neckline broken. We couldn't recapture it. That's in the bear camp. So it's another chart, guys, that it's in a spot where it can kind of go either way. Very, very difficult to read. Maybe we actually get another move down to this support and then we finish really well or something. I don't know. It's really tough, guys. But the XLF, it's also showing weakness, and we know that unless the XLF gets a little giddy up going and really starts getting back above this neckline here, that the market's going to fall. If you see the XLF taking out these lows on Monday, Tuesday, and heading down towards these lows, watch out. That's not good. The XLF needs to hold these Friday lows and make a move higher, or the DJ or the market is not going to be in a good spot. We're going to get that pullback because this is underneath a double top neckline that's broken. I mean, that's just as simple and plain as you can put it. We have a reversal candle, but we don't have the follow through yet. This can be an early tell. I mean, I'm even going to put some alerts here. So on Monday, I'm ready. And I know the market direction straight off the open. If I find the XLF getting below those lows or above those highs on Friday, I think that's going to be a good tell. And then just watching, is it holding under those lows and then making a move lower? That can be an early sign, along with the DJT. Watching how that's acting on Monday can be a really good sign. Now, then you have tech. I mean, this tech just continues to blow everyone out of the water. But if you look at this, guys, it's very equally weighted on both sides. You see pretty big down bars, pretty big up bars. It's getting pretty volatile in here. And this is the semiconductors. These are your AMDs, your NVIDIAs. So these are just only a part of technology. We'll look at the Qs as well. But you have in the Qs and the SMH, you have a bit of a kind of compression going on, right? You have a compression at these highs, really strong resistance, but you've got people buying up these lows, and so you've got a really strong compression here. And this is going to be the same thing, guys. This is not necessarily look good to me. When you get this big reversal bar, you don't really want to see a gap down and then a finish down below the half of that bar. I don't think that's strong. I think that's weak. And so I think the SMH is showing more weakness than strength at the moment. I wouldn't be surprised to see this one roll over and come down to these lows. This is a pretty impulsive down move. We couldn't get follow through here. That's my main thing here, is we couldn't get the follow through. It's one to watch. If we continue rejecting kind of these highs on Friday, same idea. We continue rejecting these, I think we'll roll over. If we can get back up, and we really need to get above these highs, above these trend line. I mean, it's right now the bears have the ball in their hands, guys. That's the main point. The bears have the ball in their hands, and it's up to them early next week if they can do something with it. We talked about, I have one of my, yep. So yeah, it's really simple, guys. The bears have the ball, and it's right here. It's right here. They have to make a down move next week, early next week, or they're going to lose this battle. They have to get this quickly off this zone. or else I'm telling you guys what's going to end up happening is we're going to go sideways and make a move higher. They have to make this thing happen quick. Okay. You want to see holding under this zone, holding under these highs, and you want to see a rejection if you're a bear quick next week. That's what you have to see. The Qs, they're in an uptrend. Everyone knows they're in an uptrend, but same exact thing. Same exact thing. The ball is in the bears' hands. They have to reject these highs next week, guys, right here. Right here. You see the breakdown. Here's your pivot where they come up. They try to get these highs back, and they reject. And so that's your breakdown candle high right here. If you see the Qs getting above here, see you later. Back to the uptrend. Back to the uptrend. They're going to fill this gap. That's how I look at it. You get over this breakdown candle, see you later. So early next week, again, the bears, they have to project quickly at that breakdown candle. Weekly chart above this trend. It's a steep trend. We'll see how long they can keep it up. But this is a breakup. This is really showing indecision here. So this is a candle that, again, is very mixed. You could get a shoot up to this gap here off next week, or you could drop back close below this trend line and continue another down leg. So we're entering a really pivotal area. I think volatility will stay pretty high. Right now, the ball is in that bear's hand. They have to take control early next week, or they're going to be out of luck. Okay. Really quick, I just want to go over just a little lesson, guys. Just a little. That's kind of all the analysis. If that's all you want, then cool. But I'm just going to go over a little like trading lesson with you guys. I want to go over this trade that I took on JD the other day, and it was on Friday. And I think it'll be really cool for you guys to kind of see how I attack my trades. So I'm going to go here. So what I typically do is on a 30-minute chart and a 1-minute chart is what I typically trade on midday. JD had earnings. I always look for plays. Here's an important thing, guys. When you're looking for plays, when you're a day trader specifically, try to pick plays that have some sort of catalyst for that day, especially during earnings season. You're going to get plenty of opportunity to find plays that have some sort of catalyst. It doesn't even have to give you a bias. It just has to have a reason why big money is going to come in and trade that stock that day. Why? Because the levels, they're going to react better. When you get a breakout or a breakdown, typically you're going to get more volume flowing in to get that follow through. That's just the gist of it. When you have higher volume, more people involved, the reactions and the movement is just going to be better. And so basically this was my JD play, guys. JD, as you can see, it was gapping up towards its all-time highs. And so these two levels right here, around 50.5, were its former all-time highs. And what I did on JD was I identified a zone where I would like to be a buyer of JD, right? I would come at these and I say, hey, where would I want to be a seller of JD on this day? And where would I want to be a buyer of JD on this day? And so typically I'm going to go to a 30-minute chart and I'm going to look at the recent days and find out, hey, where would I want to be a buyer? How I do this, how I look where I want to be a buyer, is I find a place where people were buying, right? People were buying, and the second key, you find a place where people were buying, and then it led to a breakout that led to new highs. The more impulsive the breakout is, the better. And so what do we have here? Right here, 48.19, we have an up move. We have a base where people bought JD before a huge explosive move to the upside. So ideally, this is where I'd want to be a buyer of JD. This was the pivot that JD broke out from off that low, so I mark that pivot as well. Somewhere in that zone, I want to look to be a buyer of JD. Now, does that mean I necessarily buy right when it gets down there? No. And that's why I have the 1 minute or a 5 minute, something smaller that can let you get a precision entry. So from there, guys, I had a few other important levels that I had marked based on the last time we were at the all-time highs, because you're not always going to get to these levels, right? You're not always going to get there. And so as I'm watching JD, I see it on a 30-minute chart, and I see we're below one of my important levels. And I'm like, okay, good, we're going to come down to my green zone. I'm going to buy. But then what I see is it's actually holding this gap. It's holding the gap, holding the gap, holding the gap. And I see this doji, and I say, hey, if JD can get a 30-minute close back above this important level, and it's not all the way up here, then I think I can get in on a retrace and try to play it, up to these levels here. And so what I do is I go down to my 1 minute chart. I see this close on a 30-minute, and I say, okay. How can I get a good entry? How can I get a good entry? And what I see is this sloping down move. And I'm like, okay, good. Like this is kind of starting to wedge here. Maybe it's trying to bottom. It's a little above my levels, but sometimes that happens. Here was my first entry right here. Right here. This is where we got above on the 30-minute close, and this is what's called a high base or a bull flag. I'm sure you guys are pretty familiar with that, but you get a pretty explosive move. Your longer term chart confirms the recapture of the level. And so what do? I buy in here, and I bought in with about 2 contracts, I believe. And then what do you do on this bar here? You add. So I added in. I added in because you always want to add when you get a small time frame confirmation like that. I added in. And what did I do? I immediately took that add in off right here. And then I took my base position off, except for 1 contract up at the top here. Why? Because this was a really important rejection area earlier in the day. You can see there was a pretty explosive move up and a sharp rejection, so that's where I took most of my position off. Now, as we go on,